Hey everyone, hopefully you're having a good day. My name's Andy, the channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. And if you want to follow me, it's at Finance. If you want to join our community, finding-value.com, where I dive deeper into all these topics, sectors, looking for investment opportunities, sharing those opportunities with everybody in the community. I also talk about my approach, the strategies I use, portfolio allocation, position sizing, macro, and whatever else people want to get a little bit more of my opinions on. Special is a coupon code. You can see it in the corner there. $25 off the first month only on a monthly membership, and a $100 discount on the yearly membership. And you can always swap from a monthly to a yearly if you'd like and use that discount. Investment Wisdom, Peter Lynch. I've read this one off multiple times. I'm going to continue to read it off. Your ultimate success or failure will depend on your ability to ignore the worries of the world long enough to allow your investments to succeed. Everyone worries about a recession. Oh, it's you can buy it after the recession cheaper. I hear that all the time. Oh, we're gonna get a recession. We're gonna have a recession. You know how long I've been hearing that? I've been hearing that since shortly after 2021. The entire way. The entire way. A lot of these stocks that we have gone in are up hundreds of percents from that recession, or 50, 60, 70, 80, couple hundred. Depends the stock, depends what sector it's in. And I think Peter and a lot of these other guys, they're right. They're 100% right. And where they're right the most, I will say this: value keeps you at the bottom of the cycle, and value will keep you away from the top of the cycle. Value is the key that you can identify with at least some certainty, and it protects you against buying overvalued assets, and it keeps you in undervalued assets. Now, undervalued assets are always at the bottom of the market for the most time, for the most. So if a sector is if it's all undervalued, then yes, it's keeping you in cycle, so to speak. And then you have to not worry about everyone else telling you that the recession is going to come 6 months from now, and they'll tell you that it's coming 6 months from now for 4 or 5 years. Tabby says, I mean, no disrespect to technical analysts, but I've never seen silver as overvalued with the gold to silver ratio still sitting at 80. So 80 is 80 ounces of silver to 1 ounce of gold. When you strip the dollar away, when you strip all that garbage, and you just price an asset versus an asset and compare it to history, that's what you get right there in front of you. Undervalued, undervalued, undervalued. And remember what I said earlier: value keeps you where at the bottom of the cycle, and it gets you away from tops of the cycles. Top, top, potentially a top there. That would have been a tough one, but and extreme patience. Extreme patience when you buy bottoms. You have to have patience for it to play out. Investing isn't. It's not gambling. It isn't a fun game. It's you get in, it kind of doesn't do anything, and then you just sit and wait for a long time. Sometimes the appreciation is quick. Sometimes it takes some time. Sometimes you chop sideways for a little bit in the beginning. You just kind of have to realize that's what happens. And then you just sit and you wait, and then you wait longer, and then you wait longer, and that's all it is. And it's not a get rich quick thing. If you try to make it that, generally you go into very risky things, and then you use leverage, and that's where you blow up. So these guys that are, quote, the best traders in the world, like Jesse Livermore, he blew up a couple times. I think it was 3 or 4 times he went bankrupt. I think he died with no money, and he was married to someone that A lot of guys committed suicide who she was married to. So we don't know if that's quote committed suicide or if she was part of something. But if that's the best trader who goes broke 3 times, that's not very good. I wouldn't consider that to be a great strategy. Obviously, there's things that you can learn from traders and investors, from all of them. Bitcoin is a store of wasted energy. Ooh, ha, yeah, I totally agree with that. Elon Musk is true. That is why Bitcoin is based on energy. You can issue fake fiat currency, and every government in history has done so. But it is impossible to fake energy. It says Bitcoin is a store of wasted energy, which it is. Completely is. A bit noteworthy that small caps have broken out of a 3 year downtrend against the NASDAQ and are actually sustaining the breakout. We've been in a very long downtrend underperformance for value versus growth. I believe that the cycle started in 2009 and has lasted all the way till I'd say about now. These things are all starting to break across the board. Gold versus the S&P, gold versus NASDAQ, gold versus crypto, gold versus Bitcoin, whatever it is. They're all those relationships are starting to break down. What does that mean? It means the cycle is turning. In an early cycle, you've got a lot of disbelievers. They don't believe in it. They question, they doubt. We get a lot of sideways chopping action in ratios, in bottoming patterns where you're chopping all around for a couple of years. And then you get into the advanced phase. We're seeing bottoming patterns across everything in the commodity space. Are we seeing topping patterns in S&P and P and all that? Tough to say. It looks like we've had 1,000 rising wedges, but it just won't fall. It just won't fall, at least not yet. It's been resilient. But here, this is IWM divided by QQQ, which is the small caps versus, I think that's the NASDAQ. And we are breaking out here. It's looking good. California is doing its part to reduce oil supplies, so Sable Offshore sinks as California judge blocks Santa Ynez oil pipeline restart. I know some people were betting on Sable going up and them getting these, um, I guess, permits or whatever they need. I I don't like these types of bets, guys. I don't like them. I try to avoid bets that are like a thumb up or thumb down, where they're betting everything on a license or a permit or whatever it is. I just don't like those plays. I'd rather just go buy something that's already producing. They have everything set up, and it's kind of low key. If you bet on something, these are very similar to like pharmaceutical companies, where it's like they win a whole bunch, they go up hundreds of percents in like a day or two, or if you lose, you get just slaughtered. I hate those types of outcomes, so I don't really play those types of of bets. I'm sure some people can be successful at doing it. I just never played them. I don't like them. Jack says OPEC Plus announced 137,000 barrel per day increase. Sounds big until you read the fine print. Only 60 to 70,000 barrels are actually coming. The rest are paper barrels trapped by old promises and bad plumbing. Some members still paying back past overproduction. Others can't lift output infrastructure, maintenance, sheer limits. Real swing power lives with Saudi and the UAE. Headlines say supply is up. The market should read illusion of supply. Have a look at my article where I explain the above of the illusion of supply. Oil might be the easiest investment to be a contrarian in recent history. It says the EIA is either telling us that they are expecting a recession worse than the global shutdown during the 2020 global pandemic, or they are wrong. I'm in the second camp that they are wrong, and that their projections of these gigantic additions of inventory, the barrels, the surpluses, they're not coming. That's my guess. But I think they're using it to try to hold price down because this is my this is my impression. Okay, I could be completely wrong. I think Trump came in and even Besant, and they talked about cheap oil, cheap oil, cheap oil, cheap oil, and I think they're trying to do everything they can to keep it cheap. That's what I think. I could be wrong though. Grady says posted this chart in the linked post below at the back test at 280 bucks, saying it was the next big buy add point. It was up 128% since then with new all-time high. Been saying for 3 years now, I'm convinced this chart will play out. It is now happening, not that the pink arrow is untouched. So there it is. This is the Huey. It's been ripping higher. It says, is it time to revisit the upper trend line of this channel? He says, I think it is. We bought at the very lows, heavily at the service, different company categories at the two different lows. Yeah, we purchased a bunch of stuff that's really low. Keep in mind, a lot of people ask me, well, is it a good time to buy this? It's like, no, it's not. Not a good time to buy it. Why? Because you're losing all of your safety. Your margin of safety is when you buy when it's low and cheap and no one wants it. As everybody becomes more aware of the price move, and the only reason they're buying it is because it's moving up, that's when it's dangerous. And the more it moves up, the faster it moves up, the more dangerous it becomes because it could snap back the other way. Now, no one knows with certainty what the entire cycle will look like. And the easiest way to protect oneself against that unknown is to buy when it's really low and cheap and it has a good technical pattern. You're padding it, you're padding yourself with a large margin of safety. If you don't do that, that's when problems arise. What if you buy it and you get a 50% haircut right after? Are you going to keep it? Are you going to sell it? Are you going to get scared out? How are you going to handle that? That can happen even when you buy it with a large margin of safety at a very low price. You can still get those types of volatility. But it seems a lot more likely if you try to chase things where you get these big pullbacks and people get scared out of it. They don't like seeing losses in the account, which is inevitable at some point. One for the oil bulls, ConocoPhillips CEO says, we don't see floating inventories rising. We don't see a lot more medium sour crude coming into the U.S. Gulf Coast, which typically happens if there's a lot of spare capacity. You look at the physical market, you don't see that playing itself out, he said. So there could be a collision coming. We're all watching some of these kind of signals, wondering, when is the bearishness going to kick in? Is there going to be a big flood of supply, which we frankly don't see? A lot of the OPEC plus increases were paper barrels. They were already in the market. So where is this glut? And that's what makes me think that the news is helping certain individuals to try to get people scared to go into certain things like oil. I think they're trying to manage it through jawbone. It's one of the ways that they can try to keep something down, but it's not going to last forever, and we'll see what happens. But insiders say we don't see the oil. Where is it? Is it coming? OPEC, if you look at some of the OPEC side, they said, you know what? We didn't say any of that. That's all made up by news. So what's going on here? What's the real deal? It says Saudi Aramco CEO declares the energy transition a failure as oil demand surges. See, I'm reading all this different stuff, and I can't get the ends to match here, guys. One person says it's a big glut, and they're usually a financial person. You go to the actual insiders, they're like, where's this oil? Where's the glut? Where's the inventory? Is it on floating water? No. If it's not in floating water and it's not in commercial inventories, then where is it? But price is low. It is cheap. It is incredibly cheap. And sometimes the financial markets are looking at different things than just barrels on the water and physical. They might be anticipating a potential recession, could be, or a slowdown, but that's not what I see in some of the charts. Usually, when you see a slowdown, you don't see things breaking upward. But that, we'll see. We'll see what happens. That's what I'll say. Here's another one. It says this is a mega trend. This is how mega trends begin. Fresh decade highs for uranium stocks relative to the S&P 500. That's uranium URA versus S&P, and it's just starting to break out there from that large bottoming pattern. On the bottom there, it says it's the highest relative strength indicator reading ever. That look bearish? So this is what I'm trying to square here, guys. I'm trying to get my mind around how are we breaking out on all these different asset classes, mostly in commodities versus the S&P 500. You know, gold breaking out, silver, uranium, lithium, rare earths. There's a whole bunch of stuff. Iron ore is starting to do it. Copper's doing it. This doesn't happen during a recession. It happens when liquidity starts coming into the system. When liquidity comes into the system, the economy grows, interest rates go up, usually, and then money starts to rotate into these sectors. So that's kind of what I am seeing. Historically, it happens during expansion phase of the real estate. But this is happening with, I think, fiscal spending and liquidity coming in from the government side, not just America. It's all over the world. Like China's doing it, Japan's doing it, America's doing it. They're just pumping money into the system. Drunken Miller on stock picking, paraphrasing. He says 50% is getting the macro view right, 30% is lifted up by the sector, and 20% is the individual companies or stocks that you're picking within those sectors. So 50% macro, 30% is the sector, and 20% is the stock inside the sector. That's I probably agree with that. Yeah. Oil is going to explode higher. Do we get a fractal first breakout, false breakout first? I don't know. At the ends of these consolidations, sometimes you get these false breakdowns and then a slingshot up. We're coming to the conclusion of this falling wedge, and sometimes you can get a false breakdown or false breakout to the bottom, and then it slingshots up. Sometimes it doesn't do that. It just breaks out to the upside. I don't know what's going to happen here. We'll have to wait and see. But this is a bullish formation. A bullish formation is when you break out of a pattern and then you consolidate on top of it and then it breaks higher. We just don't know what happens in the very short term right here. Now, some people are calling for like $20 oil. I don't know about that, guys. I mean, you're going to have to shut down the economy or something to get that, I think. But I think that oil is going to follow what gold has done, and we're going to go up probably quite steeply at some point here. Natural gas, only near-term solution. Idiot retail masses bidding up the nuclear sector are buying the wrong lane. Should be long, balls deep U.S. gassy names, which need to double production by 2030 at least. Someone here said the trillion-dollar question, how will we generate enough energy to power all of these AI deals? The U.S. Department of Energy says U.S. data centers will use 325,000 to 580,000 gigawatt hours of power per year by 2028. That's equivalent to the power used by 40 million homes, all on just data centers. Currently, nuclear power is viewed as the only solution to the impending power shortage. The average nuclear, and then he goes into nuclear, right? Nuclear is not going to power this. There's no way that nuclear is going to power it in 3 years. Not going to break, I hate to break it to you. Now, that doesn't mean that uranium can't go up, but I don't think the majority of those companies are not going to make any money before 2030 at all. Hardly any of them. And natural gas, and I think probably coal, are going to make billions. Billions. maybe even more than billions. Who knows? But we have a lot of power coming, and the only thing that I see making money before 2030, nat gas and coal. I just don't think uranium and nuclear can come in fast enough. I don't think it's going to happen. Juniors are now crushing the majors. This is a full-blown mania. The macro couldn't be more bullish. A global rush to secure strategic minerals after decades of underinvestment. The space outperforms everything in the years ahead. Agreed. We're coming in a cycle. That's what happens. Now, what you have to do is you have to identify what's good. That's the macro. You have to look at the sectors. That's, the other, 30%. And then you have to look at the companies, which are 20%. I think the macro is good. I think the sectors are good. And then you got to look at the companies. Now, the companies, there's a big difference between a lot of the companies. And that's where I think the cream's going to get separated, from the rest of it. It's picking those companies and making sure that you're allocated properly. And it's not easy. There's no right or wrong answer here. Allocation's a difficult one. And some people are more conservative. Some people are more aggressive. It's a difficult way, a difficult thing to get right is to allocate properly or to allocate the way you should allocate. And that's to capture the upside without taking too much risk. And that's what we're trying to balance. Eric Nettles says the most anticipated oil supply glut in history. Watch, there's no signs yet of onshore builds beyond seasonal norms. We'll know within 2 weeks if the reported surge on water makes its way to inland or not. For now, spreadsheet builds over real builds are what are happening at this moment. And we're looking to see if the oil is coming or not. And then Anas says, where's the large oil surplus? EU oil inventories are low. The IEA continues to underestimate global oil demand as it did in the last 18 years. OPEC restraints only if you were expecting more. US-Russia sanctioned LNG in the northern route, China Arctic route. Ukraine-Russia refinery hits, shipping carbon tax not good for US LNG. And then oil gas investing insufficient, the IEA contradictions. And this is EU's oil inventories, which is on the low side. So where is the oil? Or is it all fake? I don't know. We'll find out. And that's it. That's where we're going to end it. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specials, the coupon code. And that's all I've got. So we'll catch you next time, guys. See ya.